Hey, I'm Dan Fitzpatrick, and I want to talk about Cleveland Cliffs today. Now, you can see the stock broke out today, big time. Yesterday, I got our people in here. I saw what was going on. This isn't a yay, look at me. That's stupid. If you're going to do that, got to talk about your losers too. I just want to explain what we did here. So I've been watching the steel stocks for a while. A lot of them are looking, pretty good. You look at U.S. Steel, you look at steel, you look at this. I mean, you can even look at some of the other stocks. They're all just kind of looking. They're all looking pretty strong. And so then that takes me back to Cleveland Cliffs. And what I do, by the way, in choosing a stock like this, when I say, oh, okay, well, the whole industry group or the whole sector is good, the first thing I do is not go look at the fundamentals. Not these days. The first thing I do is just look at the chart. I'll compare all the charts. And then find the best one. If I see a good setup, then I'll take it. And the reason I liked this setup was, we're in here at 2010 yesterday, and I could drag the stop just below the 50-day moving average, and I got a 6% risk. Okay, so that was basically what I did. So I got a 6% risk. Now, today, from that 2010, now the stock's actually up 15%. So already my reward is over twice what I risked. I'm risking 6% to get in the trade. Now I'm up 14%, almost 15%. So that's a pretty good do. Like this is a good trade going, but it's a volatility squeeze. So I don't just go, oh, I got to take profits. Like, look at the price here. But what I am doing, you may think this is kind of silly, but I'm actually just raising the stop to break even. That's all I want, is just to lock in a break even on the trade. I got to give this more room to work because this is massive volume. So there's absolutely institutional buying. You don't get 90 million shares by the Wall Street bets guys. So this is institutional buying, but you're also going to see this situation unfold where they'll say like, well, crap, it's up 14%. I ain't going to keep buying it tomorrow. So I'll kind of take my foot off the gas, see if the stock can come in, and then maybe we'll buy a little bit more down around 21 or even 20 for that matter. So I need to play for that kind of move. So I've at least taken break even out of the trade. If you want to, you set staggered stops. I think there should be no stop set below your entry. If you're up 14% on the trade, frankly, that trade should be a winner. It shouldn't even be a break even. But I'm just kind of taking this slow. And tomorrow, for our members, I think we'll probably wind up setting some staggered stops just to make sure that if the stock does retrace, we can be locking in some gains. So look, if you want to make big money, you got to let your positions work. If you don't, if you're hyperactively trading all the time, you're never going to make big money because you're not giving the stock enough time to reward you. So anyway, that's all I got for you. I'll see you next time.